The price of silver is on the move again, breaking out and moving to its best levels in 2.5 months. So is this start of a rally that's going to crack $20 an ounce? Hello, I'm David Jones from Capital.com. I thought we'd do an update on silver because the price has moved so sharply in recent weeks, and we've got quite a few trades on from other videos. So I thought we'd take a look at what the next few weeks may bring. As usual, we'll have a look at what's been happening with the price. I'll come back and talk about what's driving it. Then we'll look to place a trade on for the rest of May. If you're watching and you haven't subscribed, if you can click on subscribe, support the channel, and we'll continue to push out lots of timely content like this in the weeks ahead. So here's the move in silver off those March lows. March lows coming in around about $11.60 an ounce. And here we are now trading at $17.30. So up by almost a half, broken out of this sideways range it was in for much of the last month. That moved through $16. So if we take the chart out, next sort of targets, if we're being ambitious, looking for a move up to these highs from earlier in the year. After that, that high from September last year. We'll look at this in a lot more detail and get a trade on once I've talked about the factors behind the price a bit more. Of course, we have a mix of trades at the moment running on silver. Here they all are. The total, they're up just over £900 so far. So various levels bought in. We'll need to do some adjusting of that. We'll come back to all of that in a couple of minutes' time. We'll go back onto the chart, look at things in more detail, update the trades, and look to get a new trade on. But first of all, let's talk about what's been going on with silver. So since those March lows, the price is up by almost 50%. At the time of recording, it's rallied by about 48% off the March lows. We've talked about the gold-silver ratio before. I think we did a video on it last year. And it's basically how many ounces of silver does it take to buy an ounce of gold. Back in March, that was 125. Historically, it's traded sort of 30 to 90. That's been the gold-silver ratio. The average is 60. So 125 was quite an extreme reading, suggesting silver was very cheap. It's dropped back since then, but at the moment, it's still just above 100, that gold-silver ratio. So there may be another reason why people are perhaps moving into silver as a defensive asset, as well as gold. We are seeing gold perform strongly as well. We have seen some constriction on the supply side for silver as we saw lockdowns around the world. This, of course, affected silver operations. For example, mines in South America were closed due to the lockdown. So that has had a knock-on effect on supply. But of course, the other side of the coin has been that demand, industrial demand for silver, has arguably been lower because we've seen plenty of industrial production around the world. So arguably those two things cancelled each other out. But we're seeing silver and gold moving again. And perhaps investors are thinking that as we start to come out of lockdown around the world, the economic outlook is going to be even gloomier than many of the experts expected. Just last week, we had data for retail sales in the US. A pretty negative number was expected, but it came out twice as worse as analysts were forecasting. So I think the risk of a much more pessimistic outlook when it comes to recessions around the world, perhaps even the risk of a second wave of the coronavirus, is something that is helping to boost these what are seen as traditionally safe haven assets. Plus, of course, if we see further action by the US central bank, this could put pressure on the US dollar. And historically, of course, a weaker US dollar has led to a higher price in silver. We've seen it move inverse to the direction of the US dollar traditionally. So it's had a really strong run the last few weeks. Perhaps it's getting a little bit ahead of itself, but let's take a look at the big levels to watch. Then we'll go back on and get our trade on. So at the moment, we still haven't cracked the 6th of March high. At the time of recording, we're about 30 cents below it. So $17.60, I think, is the next intermediate level on the upside. After that, $19. And then we're looking back to those highs from September last year, just ahead of 20, coming in at $19.60. On the downside, lots of support left in this massive rally up. I think the most immediate one is around about $15. Then we've got intermediate levels coming in around about $15.30. We'll see those on the chart now. So let's put some color on these numbers. So just a reminder of the bigger picture view for silver over the last few years. So it had been in decline pretty much from those highs in 2016 around about, $21 an ounce. It had been in decline. Then it built a base in 2018 and really accelerated into the summer of last year. That rally flagged in the last quarter of 2019, and it fell off a cliff this year when we saw really market panics around the world because of the spread of the coronavirus. So I think what's important to concentrate is really the period since September of last year. So let's just zoom things in. So we'll stick with a daily chart for now. Clearly, the momentum at the moment is still positive. I think the next hurdle, I talked about it briefly, but it's these March highs. So around about first, second week of March, the highs coming in about $17.60. And at the time of recording, it's trading at $17.32. You can see it was a little blip, a little dead cat bounce on the way down. So for me, that's the first hurdle. And I think if we can clear there, then there's not much in the way until we start pushing back to almost $19. So $18.95, 24th of Feb highs, just before it rolled over properly and plunged. So from a short-term trading point of view, and remember, I'm looking at it from a trading point of view, I'm not looking to hold for the next 10 years, unless it goes up every day for the next 10 years. I'm looking to really capitalize on momentum here. You know, I still definitely want to be a buyer here. So I'm either a buyer on dips or I'm a buyer into strength. Looking at the RSI down here, we've got a 10-day RSI. Not surprisingly, we've got a pretty extreme reading on the RSI. We've got to go back to the beginning of this year and those September highs, September 2019 highs, to see the RSI this extreme. So in the short term, at least, I don't think it's too much of a stretch to say that perhaps the price has got ahead of itself. But again, any weakness, I think, looks like a buying opportunity. We'll focus on the shorter term in a second and see where the buying levels could be. On the MACD, we had a good, clearly, MACD buy signal back at the end of March. Went briefly negative, it seems, in early May, but it's flipped around again. So not too much from that at the moment, but clearly a great run over the last week or so, but perhaps a bit overstretched. Let's look at the short term and look to get a trade on. So here we are on the hourlies, and you can see how it had been for much of the last 4 weeks or so, trapped in this sideways range, and we had the breakout. We had the breakout, through 15.85, so through $16, and the market's really taken off again. Moved not quite 10%, but a decent move on that break. Not surprisingly, short-term indicators looking a bit extreme, but for me, any weakness from here and a bounce looks to be a buying opportunity. Let's zoom in on the latest bit of the trend just over the last week or so. Let's focus on the price for now. I don't think we're going to get much from the indicators when the market's moving as extreme as this. At the time of recording, we've pushed in the latest hour to a new high for this run since the breakout. Shorter term, very short term support coming in at $17.10 from the early hours this morning. Bigger support back down here at $16.30. You can see on May the 15th, that spiked lower and then the market pushed higher again. So for me, from a short term perspective, any drops down towards the low 16s, I'll be looking to be a buyer. And I think it's only if it starts to break below some of these old supports do we have to worry that the strength, in the short term at least, is starting to run out of steam. But going back to the daily chart, if we picked up on the bigger trend, we've got big support down at 1450. So I think we have a whole band of support if we saw a deeper pullback running from 1450 through to about $16, the top just above the recent range. So still really bullish. If I wanted to be more patient, I'd be waiting for the market to sell off and looking to buy back into any strength from here. Let's take a look at the existing trades first of all. So here are the trades we've built up on silver over the last couple of months. So starting off 23rd of March, buying in around about $13.50. Then the 6th of April, buying in at $15. And then the last trade we did from the last video in May on silver, buying in at $16.10. So we've got various stop losses. What I'm going to do to make things easy, I'm going to move the stops to $16 on all of these positions. So it locks in profit for most of these trades and gives the market a bit more room to move. So on all the open positions, the stops are now moved to $16. So that way, if the market does sell off heavily from here, I'll be taking out most of the positions for a profit. But if the market continues to push higher, I'm still in the trade. Let's look at a new trading idea. So for now, I am going to focus just on price. This is the move off the March lows. I think if we do get a sell-off, there'll be plenty of people looking to buy back into that, thinking they've missed out on this surge. So what I'm going to do, I'm going to put an order in to buy if the price drops to $16.50. So I have those various trades running at the moment. I've got enough exposure to silver on this account at the moment. If the price drops to $16.50, then I want to be a buyer. But I'm going to put a stop loss. I'm going to put a stop loss in at 15. Okay, so I'm expecting if the price does pull back, for it not to pull back into the previous range. Okay, so I want to buy a dip here. Let's set that up. So there's my order. The price is currently 17.36 at the time of recording. I want to buy 245 ounces if the price drifts back to 16.50. And don't forget, that's only where it was on Friday. So the end of last week, that's where the price was. So I don't think it's too pessimistic to expect a drop back to there. But if that order gets filled, put a stop at 15.50. So I'm looking for it not to pull back into the previous range. Let's place the order. So that order's been placed, and I think it's really interesting here. You know, we do have this hurdle at 17.60. I think if we can break that, then we start looking at a run back up to the highs for the year ahead of $19. For now, at least, that recovery from those March lows is still going. So for me, any weakness still looks like a buying opportunity, with lots of support running from $14.50 on the daily charts, you know, through to $15.5, $16 an ounce. So silver continues its spark back into life. That's the end for this update. We'll leave things there. So from me, David Jones, and Capital.com, good luck with your trading. For more trading videos just like this, please subscribe to our channel.